It's been a hot, cruel summer for the energy sector. The XLE Energy ETF down more than 12% since June. And just a few weeks ago, the Chartmaster said there could be even more pain ahead for this trade.
Every single time the relative line has rallied to that downtrend line, it has failed to the penny. If one wasn't literally perfect in their timing, it's been nothing but a headache.
Since then, the XLE has continued its drop, falling nearly 7%. So what a call that was. The Chartmaster says do not be tempted to buy this pullback, though. Carter Worth of Cornerstone Macro is here to chart it out. Carter, what do you see?
Well, I'm always tempted. I mean, that's the thing, and that's what makes a market so fascinating, interesting. Let's look at a few crude WTI charts first and then go on to energy. So the first chart you see on the screen, of course, that's just the one-year chart of WTI with a trend line drawn. And obviously, we have a break-in trend. We're down almost 20% here. And so the question is there any real insight at this particular moment? The truth is no. Take a look at the next chart and look at the annotations that I have there. So we know you have a low down in October at $34 a barrel, and we have a peak just 3 months ago at 77. And we've given back, yes, $14 a barrel to where we are now at 63. Well, it's not random, right? That $14 decline is exactly a 33% of the preceding advance of $43. So the question is, having given back a third of the preceding advance, is oil maybe where it belongs? I think it is. The delta might be causing this, as discussed just moments ago. But the point is, it's really about energy stocks. And let's talk about that, because I just think it's the trap that keeps on trapping. So first, just to put the whole sector in perspective, we know that it's only 2.7% of the entire S&P, 23 stocks, and a total market cap of 900 million. Now look at this comparative chart. This is the energy sector versus the S&P going back as far as data is available for the current GICS sector data in 1989. And at this point, the S&P is beating the energy sector almost fourfold. And so that's the tempting part, looking at those two lines and thinking, maybe we should play energy because it's so bad it's good. But the problem with that is, and let's look at the last two charts, is that one has had to be perfect in their timing. And you see that here. This is over the past 3 years. You've had two brief windows where it was sort of right to be long energy. The bottom panel is relative performance of the sector to the S&P, and it has failed every single time at that downtrend line. Final chart, I've tried to annotate here the two instances. One was a 3-month period and one was a 4-month period where there was actually any alpha at all in the energy sector over the past 4 years. And so it almost imputes to the practitioner a timing expertise that doesn't exist. It's just been too hard, not worth the headache. And then there's this. At only 2.7% of the S&P, maybe why bother?
Thank you very much, Carter. Before we trade the trap that keeps on trapping, as Carter calls it, we do have some breaking news on J&J. Let's get to Frank Holland with the story. Frank.
Hi there, Melissa. Shares of J&J down almost 1% right now after Chairman and CEO Alex Gorsky said he will step down as CEO effective January 3rd of next year. He will transition into the role of executive chairman. His replacement will be Joaquin Duato, who's currently the vice chairman of the company's executive committee. Again, this change is happening effective January 3rd of 2022. The stock is up more than 170% since Mr. Gorsky took over back in 2012. He also issued a statement saying it has been an honor and a privilege to lead this company as chairman and CEO for nearly a decade, and I am pleased to serve as executive chairman to help oversee Johnson & Johnson's ongoing progress, improving the health of people and communities everywhere. Obviously, Alex Gorsky oversaw the company's development of the COVID-19 vaccine. Again, the stock up 170% since he took over as chairman and CEO back in 2012. His replacement, Joaquin Duato, will take over January 3rd of 2022. The stock down just about 1%. Back over to you.
Frank, thank you. Frank Holland. Pete, just quickly, should investors think differently about J&J with the new CEO?
I think that you always get a little apprehensive, Mel, because of the fact that you're looking at it and you're saying, well, who is this person? Where are they coming from? He is coming from within. I think people could be a little bit more comfortable about that. There's plenty of time. I think Gorsky is giving plenty of time. He's going all the way out to January. I think that gives us all time to know a little bit more about the incoming CEO and what the direction is it's going to be for going forward. But it's always a little bit nerve-wracking. And you know what? I'm looking at a down less than 1% or 1%. That's nothing. So I'm not overly concerned about it right now, at least today.
All right, let's get back to energy. And Carter ended his spot with a very provocative question at just 2.2% of the S&P 500. Why bother? Nadine, why bother?
Well, you bother caring because it's got a higher beta, right? So as I think it was Dan or Pete said, I can't remember now, the higher highs can go fast and the lower lows can go fast. And so if we're trading down 33%, you can backtrack that a bit. But I have to agree with Carter. It's that it's been breaking down short-term and intermediate-term trend lines for us. When we see that, we have to pause. And so while it does represent for us a 3.5 upside versus downside, is that exciting enough? No, it's not exciting enough. It only has a 13% implied volatility premium, and the volatility is still pretty high. So we'd like to see the numbers a little bit more in our favor before we jump in.
The answer to why bother also, Mel, is because there are trading opportunities here. To Nadine's point, I mean, for example, a name like PSX, which I thought it was going to 100. I think it got to 94. I never thought it would be 66 again. But this 66 level is where it broke out from back in January. The risk reward, I think, sets up well. And just may I add one other thing. How long have you been doing this show?
Oh, a very long time.
It is quite a long time. I believe in January it'll be 15 years. I can say with almost absolute certainty that the word practitioner has never been used on this show until a few minutes ago by Carter Braxton Worth.
No, I feel like it hasn't. I can't think of the circumstance, but I mean, practitioner is not so out of the range of normal.
Just telling you.
That'd be an unusual. Is there an oil stock, Dan, that you would bother with?
Not really right now. If you look at the XLE, which is the ETF that is made up primarily of Exxon and Chevron, I think 45%. You know, it just broke down from that breakout level back from February. It's below its 200-day moving average. You know, if you think that move, and Pete used the term before, there was a lot of Johnny-come-latelys or whatever he said who got onto that trade once crude had broken out from 70. I think it probably overshoots to the downside a little bit. That's a really bad technical breakdown, in my opinion.